Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, September 14, 2024. We are excited to bring you 1 hour of mortgage and real estate talk. I'm Harvey Freed. He's Harry Glanz.
Good morning, everybody. Lots of knowledge to be passed on today. Coming up to a crucial time in the market this week. We got a little Fed announcement coming on. Everybody's hanging their hat that we're going to get rates lowered, and I'm going to give my prediction what's going to happen later on in the show. But thank you. We have some great guests, and always a great panel, and it's phenomenal.
I'll let Becky introduce everyone. Becky Alley, of course, top 1% of all originators in the U.S. Hey, Becky, good morning.
Good morning, Southeast Detroit, and welcome to the Hardcore Mortgage Show. I'm so excited. I feel like, I missed, I think last week, so I feel like I haven't been here in a minute, so it's nice to be in the room with my amazing people next to me. So I got to my right, Miss Lisa LaRowe from eXp Realty. She's an agent not only in Michigan, but she's building a team in South Carolina. So she not only is boots on the ground in Michigan, but she also knows what's going on to the south of us. Because I feel like sometimes when the market is trending, it kind of comes from the outside and then up, and then Michigan sometimes is the last ones to, kind of hit what's going on in the market.
Good morning. You are so right, Becky. It is exactly that. The Michigan does tend to get things a little bit later on, and it is so great to be plugged in and getting what's going on nationally.
Yes.
For sure.
And I want to also introduce her associate. We got Lindsay Silcott in the house.
Good morning, everyone.
Hey, Lindsay. All right.
Hi, Linz.
Get that mic right up there. We're going to hear, yeah, there you go. She's a professional.
You bring that up, what's going on nationally, and like Lisa said, Lisa's full of knowledge, and it goes something like this. We get things last year. All right. Things happened last year. A market boom happens last year. Good news is a market bust happens here last. But all around the country, there are things different going on. You can't focus when you read in the paper about what's going on in any other area than where you want to buy a house. Right, Lisa? So right now, we're still in a little bit of a glut, right? Not a lot of houses, more buyers. You have more buyers in your bottom right-hand drawer of your desk than you do sellers, correct?
We absolutely do. When a house hits the market, there's not a lot of time frame. I just looked, it was like 39 days for August and July that a house would be on the market, and even less in June, of course. So we did get a little bit of an influx of inventory, but not enough to fulfill the buyers for sure.
Crazy industry we're in where homes used to stay on the market for 2 to 4 months. And now, because of the pandemic, when homes were flying off the market within 24 hours or multiple bids, weekends we're having 30 or 40 multiple bids. And now 33 days, I think it was like 33 days in June, and then it pushes back a little bit, 39, you said in August. And we'll see how September and October look. I feel, because I got some calls late last night, our families are getting out there. The weather's definitely cooperating. And we've turned into this 365 year. We're definitely a buyer's market, a seller's market all the time here in Southeast Michigan. So we'll focus a little bit too on pre-approvals today and getting your ducks in a row, because it seems like that's an ever-going thing where we really want to have you prepared in today's marketplace. And again, there's a lot to review, Harry. Mortgages are simple sometimes, and the other times there could be a little bit more complicated. So you definitely got to figure things out, because everyone's got a little different situation.
Well, I'm of the belief everybody knows where they stand. Okay. They have to supply us information in order for them to be approved and to get that loan. Okay. They know their financial standing. We need certain documents. That's never changed in 35 years I've been doing this. Okay. You still need tax returns, pay statements. You need to show where the money is coming from when you're buying a house. And we have to pull your credit, and now there are credit scores involved. And that dictates what the rate you're getting. Okay. So everybody knows this. So if you just supply it and you get it, now there are more moving parts. There are other things that can happen in a transaction. You can't go out, and this is our favorite thing, Becky, you can't go buy that furniture right away, can you, or the appliances or everything, until you get the house. So, and you can't buy the new car or lose a job, or, you can't do these things when you're looking to go ahead and buy a house and apply for a mortgage. So, I mean, we see this all the time, right?
Yeah, I call it the hungry eye syndrome, where you are buying the things before you're ready to buy the things. And if you're buying the furniture before you actually close on that house, and you are right borderline as far as qualifying, because right now we have to, really push the envelope a little bit when some of these buyers are qualifying, because it's a competitive market. So if you buy that furniture and that's going to pop up on your credit report for us, that might disqualify you for the mortgage. And, a lot of times inadvertently people sabotage themselves in the home buying process. They don't do it intentionally, but it's a problem, you have to let your loan officer know what you're doing every step of the way. And, right now car payments are extremely high. I talk about that very often. And a lot of times people are leasing for their family members, their children. And that also has a huge impact on what you're qualifying for.
Yeah, they've co-signed for a car payment, or they're an authorized user on somebody's credit card. This all hits your credit report. And we have to verify, then re-verify. And then a couple days before closing, go ahead and confirm nothing has changed. So when I say that, Lisa, and you've seen this a million times. Listen, we've been around the block, probably around the same block a lot of times. And those things don't change. Those are the constants, but we still get the calls. Why is this happening? Well, it's happening because some things changed from the beginning of the transaction.
Absolutely. Yeah. I actually was blessed to be able to sell my brother's home recently in Otisville. And as soon as we got out of the closing, the agent said to her clients, now you can go buy the furniture.
Yeah,
right.
And I've actually had it happen to me as a younger agent where my clients actually did go out and bought things and the whole deal fell apart. Like we were done. They had new furniture and a new car and no home.
Oh yeah, that's it's really bad. And and a lot of the times too, I just want to take it from a perspective of some of the conversations we get where the buyers feel frustrated, right? They're like, I just gave you a pay stub, or why do you need an updated bank statement showing the earnest money deposit comes out? The lending game has become evolved since, the early 2000s, where everyone has to be overly qualified for each mortgage. So when we're asking for things, there is a specific reason for it. Because I assure you, I do not want one more piece of paper that I don't need, or a screenshot of something with someone's fingerprint in it or fingernail in there. It's a beautifully polished nail, by the way. But, it has to be things that we can read and we can see. But it's because we have to show that you are overly qualified for this mortgage. Everyone's set of steps to get to where they're going. It's the same, but it's different for each person. So if we're asking you for something, try not to get frustrated, because at the end of the day, our goal is to get you from A to Z and changing houses as soon as we can humanly possibly do that.
Listen, if we didn't need it, we wouldn't ask for it, period. Just remember that. If we don't need it, we won't ask for it. So what do you think? We want to string it out longer? No, we don't. We don't. And that's the thing. We're all in this, both sides, realtors, title people, mortgage people. We're all on the same motivating factor that we want the transaction to close. We want to close it right. We want to close it soon. And we want to get you into that house. We all are motivated by the same thing. So remember, if we didn't need it, we wouldn't ask for it.
All right, we're going to take your calls all morning long. Again, we got sports coming up right after us. 248-539-9797. No need to take a text. Give us a call. We want to hear from you and what's going on in your mind.
Wait, Harvey, I want that guy that was hitting me up that wouldn't answer his phone.
Forget about that.
All right, so everybody, we get the ticket text. I'm calling you. We call everybody after the show.
Oh, yeah.
So one guy was killing us last week. It was beautiful. I want him to call again or just do whatever. My man, I called you all week long. You know I did. You didn't answer your phone. All right? I got you. I got you.
All right, let's circle back, though. I like this pre-approval talk we're on, because we talk about funds to close all the time. And I think you could be prepared. And you see this lease, a move-in condition house. Well, great. Now you got more money to work with. So maybe you can put more money down. Maybe you'll have more money to get that car after the fact or whatever you need. But definitely funds to close. When you're looking at a house that needs work, you have to have a qualified agent. You have a great agent like Lisa. And what you're doing is sharing this knowledge. And you know what the costs are going to. Adam just left. Cost of roofs and things of this nature, and furnaces and air conditioning and flooring and kitchens and all these great things. And then you talked about the structural stuff, foundations and stuff. You might need to keep some extra money, because this house that you're going to buy, again, everything's perfect. Location, it's checking all the boxes, but it needs some updating.
Yes. And the great thing now is I've noticed we've been actually able to sometimes get some concessions for those things, where in the past couple of years that was unheard of, right? So with the market being just a little different and maybe a little less competitive on those homes that actually do need the updates, we sometimes can get you some concessions to cover some repairs. And Becky's been great at helping us through those processes. I'm always giving her a quick call. Becky, can we do this, that, or no?
Yeah, it has to be. You have to be in total unison with your team, right? Who you work with matters. And what we're talking about is like if you're doing a home inspection and let's just say there's a, glass block window and it's cracked, okay, or something like that.
Yeah.
It used to be where the last, in 2020, because it was so competitive, you'd be like, the buyer has to assume it. And you're just like, giving everything to the seller, where now, it's still technically a seller's market on paper, but the buyers are savvy. The people that they're working with are they're willing to negotiate. So you can ask the seller to, hey, can you please fix this glass block window because it's going to come up on the home, the FHA private inspection or the appraisal or whatever. So you have to be boots on the ground, eyes open. You're looking at what's happening. So, and what's really cool about this market though, is it's a place where both buyers and sellers can both win.
So again, Lisa and Lindsay, I have this question for you. Just like we know and we believe that borrowers know everything going on in their financial background, don't sellers of homes know everything about their house, like a cracked window or a little furnace glitch and all that?
I'd say yes. They pretty much know what's going on in their house.
Beautiful.
Although we do
Love
sometimes ask them to have an inspection, right? Pre-inspection.
All right, we got tons to share with you. You can hear the vibe in here. 248-539-9790. When we come back, all of your calls.
So good.
Fun.
So good. You guys are so good.
This is amazing.
Alrighty, welcome back to the show. It's 9:14, and we've got, again, Lots of mortgage and real estate information. If you're thinking about being approved for a mortgage, call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. You could find Becky, myself, Harry. We're all there all week long, and all week long giving you great information. Lisa LaRowe, eXp Realty, and Lindsay joins us too this morning. Lindsay's going to jump on the mic. We're talking this morning about a lot of great stuff, and want to tell you that we are, of course, sponsored by Capital Mortgage Funding and powered by CMG Home Loans, NMLS 1820, equal housing lender. And you can call us here in the studio, 248-539-9797. I got it all out real quick. You guys see the Tiger game last night, by the way?
It was, yeah. It was a combined no-hitter for 8 2/3 innings. Then the guy gets up. He leads. Hits a triple.
A triple, right.
Right away, hits a triple in a one-run game. Then we shut it down. Listen, they're doing amazing things. We have the Lions. We have a home and home, actually. We have the Tigers and Lions on the same day on Sunday. Going to be crazy downtown.
It is going to be crazy downtown.
It's going to be wonderful. And the weather is supposed to be like this, right?
Yep.
So we got all good things going on here, and it's a lot of fun. Listen, when your team's in a race, even if it's a wild card or, we're going to make the playoffs, not make the playoffs, you want to just play meaningful games at the end of the year.
Oh, yeah, really
and that's
fun.
Where we're at.
And we like mortgages and real estate, and we also like a lot of sports here in Detroit. That's what we dig.
Yeah.
Hey, got a little ticket text here talking about first-time home buyers. What can I do to make myself more qualified? And I'm going to segue that with a little bit more information. You really got to be upfront with your lender. I mean, it's about these documents, and we want to get you right away. We want to set you up and review your credit, make sure your employment's been steady. A couple calls most recently, I found that out just asking more and more questions. You don't want to start changing jobs. If you're thinking about home ownership and you go from a W-2 situation to a 1099 situation, you sort of become self-employed, you're receiving tips, your tax return is going to look different. That makes it more difficult. So there's some things you can do to make yourself better. Maybe give us a call ahead of time before you make these major changes.
Yeah, you have to start the conversation as soon as possible. Like if you are thinking about buying a house within now or even the next 6 months, you got to have the conversation right now. I actually had a longtime client of mine reach out to me. His daughter's now looking to buy. And he's like, hey, I haven't talked to you in a while. It's been about 3 years. And he's like, it's my daughter's turn. He was like, I just want to make sure you're still doing the things. He was like, there's no one else I'd rather them hold their hand than you. And I was like, thank you. I'm so flattered. And he was like, they're on a 6-month timeline. They just want to know. They want to go through the process with their eyes open, knowing what's happening and making sure they're confident. And that's where it all starts, because you don't know what you don't know. And it does matter what Harvey said, that if you had a job for 6 months and then you're off for a month and then you had another job for 8 months and life happened, maybe you're sick, maybe you're taking care of family members, we can explain those things, but we have to look at the overall picture and the profile for you. So the sooner and more honest you are with us, we can say yes, no, or maybe we can do this and maybe we can do that. Because one thing I take a lot of pride in at Capital Mortgage Funding is we all have at least 20 years experience or more, like at the bare minimum of 20 years experience. So we're not a rookie shop, and there's nothing wrong with rookies, but at the same time, like we know how to pivot so it doesn't perish. And we're going to find that scenario, and the plethora of programs that we have to curtail each program to the individual buyer is key. But it all starts with that transparent, honest conversation. Help us help you.
And Becky, there are people out there that think they might not be able to qualify. They have this preconceived idea. It's in their head, and they say, I'm never going to be able to qualify. Well, you don't know. Like you said, you don't know what you don't know. If you make the call, and it doesn't cost you anything. With us, it costs you zero. We're not going to ask you for a credit card. You're not writing checks. You're not paying cash for us to investigate that. And I'm glad we threw it to Becky right away, because Becky's really good at peeling back all the layers of that onion and digging deep on it, because you have to. Again, nothing wrong with rookies, but when you have 20, 30, 35 years of experience, it matters because, again, we've been around the block a few times, and that helps. And Becky's really good at doing that.
Well, that's one of the biggest first-time buyer mistakes is they don't even try. Like sometimes they're the first generation people buying. And sometimes yes, rejection is protection a little bit, where it's like maybe something that didn't work out for you works out better for you in the long run at that moment. But you can't be around negativity where people are just inputting their own negative thoughts. If you want to buy a house, have the conversation. Let's figure it out, whether it's now or 5 years from now. We don't care. It's your timeline, but let's get you in that vehicle moving with confidence so we know how to get you there. Because at the end of the day, we talk about it, park your car in your own driveway versus somebody else's. Invest in yourself, invest in your future, and then let's talk about how we can build that real estate profile for you and get your 5 different properties in 5 years.
I love that conversation, Becky, because we do have this. I wish more buyers would start off way earlier. Like you said, 6 months, a year in advance. Let's give you the best power that we possibly can. Lindsay and I had a buyer come to us. He's been hanging around, but not really doing anything. And then he said, okay, I need to leave in 45 days. I'm like, why? Why? I've been trying to get you through this process. But of course, we said, we'll do everything we can to get you where you're going. Right.
And then but let's play that out though. In a situation like that though, eventually you're going to have to move. And let's just say now you're forced. Someone made the decision for you. Now you're reacting instead of responding. Now you're finally ready to let someone pull your credit. And if there's something wrong with the credit or there's a situation, now we have to work backwards and everyone's in a panic because now you're in our wings and we're going to get you there no matter what it takes. But now it's a different kind of experience versus like this, we're going to take our time and we're going to get you there. We're going to fix it. Now it's like, do this right now, today, let's go. And we're good at doing that. We're good at moving the needle every day for everyone, but give us that time and so we can respond to you versus everyone reacting.
Yeah, sooner is better if you want to pull that credit score
Yes.
up. And a lot of times it's a small thing you can adjust and all of a sudden your credit score goes from 680 to 710, 720, or maybe the low 700s to over 740 or 760. That betters your situation when it comes to the actual interest rate and sometimes just the closing cost involved. So variables are out there and there's lots of things you can do. Sooner's better. So get in touch with whoever your lender is. And of course, we want you to call us at Capital.
Look at all the apartments that are being built. Okay, if you don't think there's big money rent,
right.
in
Yes,
paying rent, you're wrong. I'm telling you here that if you would have bought a house, and I'm going to give an example. People are going to say, well, here, it's crazy times, COVID, all that kind of thing. If you bought a house in 2018 and you want to sell your house, you're going to make money because you built up a lot of equity. Even if you bought it the early stages of COVID, even if you bought it after, if you bought it in 2022, if you bought a house last year, the property value, you've made money on that. So what we say is if you can afford it, it's always about fiscal responsibility. If you can afford it, take a look at buying now sooner than later because in 5 years, the house is going to be worth more. Now, can I guarantee that 100%? Nothing's a guarantee 100%, but I'm telling you, if you look at the timeline of real estate and we do a graph and we chart years, all right, real estate has always been the best investment.
Yeah.
Right? You're creating your own wealth and that's the key.
You're talking about building equity. We got a ticket text here. What do you think about home equity agreements? Hey, thanks, Sid from Ann Arbor. We'd appreciate you calling next time, but we love you, Sid. Becky, I'm going to throw it back to you. Again, if you got a mortgage recent in the last 3 years, it's pretty recent, you might be one of those clientele that want to hang on to that particular mortgage. Not always. We got to cram the numbers. So sometimes if you have a real low interest rate now, maybe a home equity loan is something to look at, but we do the numbers for you because it's an overall. How much equity do you need? How do you need to access that money? It's pretty important too. Could you use a lump sum or do you want like an open checkbook because you're going to be doing home improvements? Becky, let's talk a little bit about home equity.
Yeah. So we do every loan that's out there, that is accessible to us, right? We do home equity lines of credit. We do get a lot of calls about home equity lines of credit because what Harvey's saying is someone has a 3% interest rate and they want to keep that locked down. What does a home equity line of credit? Because they need to make other home improvements. They have to make improvements to their home. So in that case, though, right now, home equity line of credit, though, it's still higher than a normal, like a note on a normal interest rate, right? So sometimes in those situations, it makes more sense just to do a cash out refinance, depending on what you're looking to do. So if you have a lot of debt and we look at the payment apples to apples, in some cases, it does make sense to do a cash out refinance just straight up.
Boy, I love what you said because if you did a mortgage and you put 5% down and you're hanging out of that 3 or low percent, under 4% interest rate, look, you might have PMI. That private mortgage insurance, when you bought the house 3 or 4 years ago at 5% down, I know you don't want to touch it, but if we can knock that off your loan amount too, that plays a huge part of what your new payment's going to be.
Well, what about the 25% interest rate you're paying on your credit cards?
Yeah, no one even bats an eyelash at that.
I don't want to bring up a bad subject, but listen, if you're carrying 22 to 25% credit card debt, I know you want to hang on to 3%. But you have to take a look at your overall financial welfare. What are you paying out in your monthly payments every single month on the 1st or the 10th or the 15th? You have to take a look at your cash flow. So if the cash flow is lower by taking a higher rate, I know that sounds crazy, your cash flow is going to be lower by taking a higher rate. Isn't it about how much you're paying out of your pocket every month? That's what it's about. You have to take a look at
And
that.
this is where dealing with professionals that have been in the business, like we talked about, like you guys have been here, you know what's going on. You can definitely advise so much better. I will get buyers that come to me. Oh yeah, I went online and I got an approval. I'm like, please, just talk to my people here, Capital Mortgage Funding. They are going to guide you in the right direction. They're going to go over everything with you, top to bottom. Make sure that you're making the best decisions, the best programs, things like that.
I want to talk about online lending real quick. So I actually got a call from someone. They're in the process of doing a refinance. It was actually at the closing. And someone that was at the closing noticed that the fees for this buyer on the refinance, it was a cash out for a veteran. It was $15,000 in discount points. So they called me at the closing table and said, hey, this doesn't really look right. Is this like legitimate? You know, I didn't know they could even charge these kind of fees. So I actually got on the phone with the client right then and there. Wasn't my client at the time. We had a conversation and we actually saved them $15,000 and we actually got them more cash out because we took the time and the accessibility that we have to these programs. So, and this was our veterans. We're one of the top VA lenders in the nation. But when you are going and you're calling these numbers, if you're trying to do a refinance, do your due diligence, because if you are paying too much in fees, you're losing out on your equity. You're giving someone else your money. So give us a call at Capital Mortgage Funding. We'll do a non-obligation look at your loan and make sure that you're getting the best deal and you can stay with whoever you're working with.
Alrighty, 248-539-9797. We come back. All your calls. business show. Give us a call, 248-539-9797. Call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. When experience counts, call Capital Mortgage. You usually don't even go to these ticket texts. Definitely want to hear from you, but a couple good ones today. And thank the guy for calling in who just sort of touched on self-employment. And that's a tricky thing because there's no doubt anyone could get a mortgage. You're self-employed, Becky, doesn't mean you can't get a mortgage. It means we're using a little bit different numbers. We're breaking down that tax return and looking at those figures over the last couple of years.
Yeah, we're really good at self-employed. I mean, we're really good at a lot of things, but if you are a self-employed buyer, obviously you're more times than not, you make more money than you show on paper, right? Because
Amen.
You have different things going on. You have your write-offs, even real estate agents, they're independent contractors, right? You have these expenses, your miles and things like that. So it's really important that you give us your tax returns so that way we can see what's coming, like what your income actually looks like, because we're going to be filing our 2024 tax returns before we know it. So right now is the time for us to see your 22 and 23 tax returns. Can you qualify for those right now? If you can't, then let's see what you're at for your 23, and then let's project what you need to show on income for your 24s, so that way we can make sure that you are showing that money, so that way you can buy a house the first of the year, because it's all about what you're showing on paper. It doesn't matter that you grossed $100,000 and then you wrote off $70,000.
Well, you can't have it both ways. You can't say you make more money but then show us less. But we have to qualify on that. There are certain add backs we can. And all you self-employed people that are on extension, October 15th is coming right up. So after October 15th, we're going to need to see that. So the extension just doesn't play. You still have to pay your taxes by April 15th. Had to pay the cash. So anyways,
that's a great point here, because October 15th gives you a few weeks to maybe change, because if you've done the extension, now you can reach back out to your lender and say, what number do I need to show you? Sit down with your CPA and show it that way.
I would tell you they're going to file. They're filing pretty quickly.
Yeah, they got a couple weeks.
But the bottom line is, if you're self-employed, we could still get you a loan. We're just going to need an extra set of documents. We need current profit and loss statements year to date through the 9/30 coming up. But it's not. It's very, very likely that you'll qualify. So people just don't want to do it. They fear rejection. Mm-hmm. And we're not going to reject you. We don't do that. We're going to advise you on how to be approved. So, there are certain things we can do. And maybe you think that you qualify for $300,000, but you qualify for $350,000, or maybe you only qualify for $250,000. It doesn't matter. There are options. There are several options. There are also bank statement situations or certain loan to values we can. I'm getting all this mortgagees and this alphabet soup, and I don't want to dribble on to you guys. But the bottom line is you make the call.
Yes,
and we'll take care of it. And there's no obligation, no credit card, no check. You're not paying anything. And I'm going to this public service announcement number 1 today, Harvey.
Oh, go for it.
If the first thing somebody asks you for is your credit card number for an application fee, you have to run away. Run away. If you're just giving advice, just run. It's just not cool. Okay, how'd I sound? Just
we call it
that's professional.
Harry calls it the hostage money, right? And when we're looking to pre-qualify someone, it's not if, it's when, right? And if it doesn't make sense for you right now, we come up with a game plan. We're never going to say, no, it's just not right now. How can we get you there? We're in alignment with your goals. Lisa's amazing at making sure she dials into what her buyer's goals are so that we can set up that proper expectation for that timeline.
And I think that's the thing. It's that being able to communicate clearly with your lender and your agent and all the people involved so that we can get you to the right place. It's so important. And I think a lot of times it gets skipped, and it shows in the transaction and how the transaction goes.
Right. Okay. Public service announcement number 2. Let's talk about it. We have to dive into it. This week's a big week in the financial markets. You've heard about it for months now. You've seen the headlines that the Fed is going to make a decision on they're going to lower rates. Wednesday. Right. Detroit Dragway. Sibley at Dick. So here's what happens. All right, the Fed's going to come out and they're going to talk about the direction of where interest rates are going to go. They definitely have to go down. Mm-hmm. How much? Let's talk about that. The market is built in 25 basis points. If the Federal Reserve has any courage at all, they'll lower it 50 basis points. But rates always go down slower than they went up. They raised them very quick, 50 bips here, 50 basis points here, there, everything. I'm telling you, my prediction, and I want to be wrong, this classic Harry hedge. All right, I want to be wrong. I want to say 50 basis points, but I think they're only going to do 25 basis points. 25 basis points are already baked into what's going on. So right now, on Friday, yesterday, rates were what they were. All right? If the Fed goes ahead and lowers it by 50, you could see more movement to the positive for us, for you, the consumer, which means your credit card interest will go down a little bit. It means your consumer loans, auto loans, home improvement loans, it could go down. But if it's only 25, and I say only, hey, one step in the right direction, because there could come another cut before the end of the year, maybe another 25. But if it only does 25, you're going to see little movement or no movement at all. That's where it's going. So if you've been talking to people and they say they're coming down rapidly, no, we have to wait and see. This is a slow process. That's my prediction. I'd like to be wrong. I hope it's a 50 basis point cut. I think it's only going to be 25.
And we'll be following up, of course, next week.
I agree with that,
about that. The open market committee meeting, September 17th and 18th, finally come with a rate cut. Sounds like it might be. Maybe we'll see. Also, the last 8 meetings, there's been no change.
Yeah, and I agree with what Harry's saying. You want to see at least 50 basis points to see any kind of like a breath in the, in the market. But right now, rates are high 5s, low 6s, mid 6s, depending on what your credit score is. I mean, so the rates are pretty strong as they are. So there are refinance opportunities right now where you can, get rid of that PMI. And sometimes it might not make sense for you to hesitate and wait for the 0.25% drop because it's going to be minuscule. So if it makes sense for you right now, do it, because you can always refinance again, maybe put yourself on a 15-year, in 6 months from now. As long as you're putting yourself in a lateral position, you can make those moves, but you have to be with well-qualified, high-level loan officers that can navigate this conversation.
Let's go to Lisa on this. Lisa, there's no doubt homeowners are actually more confident. They're more confident as they get into retirement because they're building this equity, and they can sort of see what the forecast is. They have a set payment. If you're getting into retirement, and you're renting, that can change. It's not set. You control the cost when you become a homeowner. You typically just control it.
Absolutely. It's the best thing that you can do, truly. And it's the American dream, right? And I'm feeling so excited every time I am able to put someone into that house, and these young buyers are coming in and they're really trying, right? And sometimes we can get them in, and sometimes we have to wait a minute.
I've never regretted buying any house. Last night, a little shout out to my neighbors, Megan and Jason, invite us over. We got a phone call at 10 o'clock. Hey, you guys just come on over. We got a little bonfire going on. You can't put a price tag on us hanging out last night and that the community, the sense of community. And Harry, as you know, I got into a little high school football officiating. I just absolutely love the sense of community when I go to a varsity football game and there's a couple thousand people there, and the national anthem and the flag. And it's just so great when you see the whole community come out. That's worth a lot of money. I'll tell you, that's a great lifestyle.
Well, you're having a good time doing it, and you're also part of something. You're getting to know everybody there. You get to go ahead and Harvey, part of being part of the community and staying young is getting to know the kids that are in the high schools, the middle schools, that you're officiating sports, and you get to see who they are and who they become. And eventually they're going to come up to you and say, hey, I know you. Didn't you officiate my game, or you coached me? Or teachers. I stay in touch with my teachers. Had the opportunity to take one of my teachers out, old coaches out, to lunch the other day. You don't forget them. They're part of you. They're part of growing up, and they're part of everything. If they've left a lasting impression, whether it's good or bad, they left an impression on you. And I say bad, I mean, if they were a strict disciplinarian, maybe you didn't like them at the time, but now you respect them as you grow up and you're older, you get it. You know what? He really cared about me and gave me some great advice. So it's part of that, Harvey, and it's, where you live. And that's why I say, if you want to pay somebody else's rent, I just, I don't agree with it until there comes a time when you can afford not to pay it. Yeah. And when you reach that day, it's got to be on your terms. Don't let anybody push you into it, because you still have to go to head. My favorite saying, lay your head down on your pillow at night, go to sleep, and make sure that your thoughts are pure.
Yeah, do what you want to do for yourself. 248-539-9797. Remember, following us, we've got Pat Caputo and Mark Ryan. They're going to be coming on from 10 to 11. The Michigan pregame starts at 11, and we've got Michigan football carrying here at 12 o'clock. Lots going on. I think they got the baseball game a little bit later here on 97.1 The Ticket. Definitely want to hear from you as we have open lines, 248-539-9797. Let's go there. All right, Lindsay, your time now. Just a little bit. You're working, obviously a little bit younger, and you got some great young home buyers, and they're excited. Tell us a little bit about what you've experienced with maybe the last buyer you were working with.
Yeah, currently right now I'm working with some buyers in skilled trades. Being in Detroit, we want to, work with our skilled trade buyers. So kind of navigating that and what the market looks like for them, and possible layoffs coming up. Ooh. And how that changes. So kind of going over that with them. And obviously sending them to Becky so that she can navigate that with them.
Yeah. So like what you're talking about is like, let's just say someone works for the union, they're a millwright or in construction, they make all their money in the, early spring, summer months, and then they get laid off in the winter. So that is common. That doesn't disqualify them from getting a mortgage. If someone is seasonal and you can show that 2-year history, you can take that unemployment income, you average that in, and we can, get a good baseline for what they're making. But with that being said, you have to be closed before they're laid off. That's the thing. So you got to make sure that if they are we're about to approach that layoff season, we want to make sure that that deal is signed, sealed, delivered before we get to that point.
Like you said, Becky, it has to be consistent. So
Yes.
you're in that kind of, I don't want to say seasonal work. That is your work.
Yeah.
But we have to show a 2-year consistent history of that and show that that's the norm. And nobody does it better, Becky.
Yeah. Same goes with commission, too. If you're in a commission employer, you got to make sure that you have that 2-year average. We're looking at it. We're calculating it. But you got to reach out to us, give us the documentation so we can make sure you are well qualified.
All right. When we come back, Lisa and we're going to dive into this, the delicate conversations. I'm not so delicate. I that's my problem. 248-539-9797. Keep it here.
You did it, Lindsay.
Welcome back to the show. Another 15 minutes or so of the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. Find us at 1-800-LOW-RATE, the best mortgage banker. When experience counts, call Capital Mortgage. Lots of moving parts. You got FHA, VA, USDA. Becky, I'm going to keep going. How about these
USDA? Like our first-time buyers?
Loans.
Yeah, we got
Mishta, Chenoa.
Yeah.
National Faith.
National Faith.
Yeah, we actually got a comment real quick. I'm going to touch on it on the Facebook Live. What are some of the first-time buyer programs that you offer? The amount of first-time buyer programs that we have would make you blush. It's quite a bit. It would kind of, to peel it back, but we have the Michigan, MISDA, which is the Michigan Housing Development Authority. You get $10,000 in some certain cities. You do not need to be a first-time home buyer, to be honest with you. We have Chenoa. That's another down payment assistance program. There is no income cap. You do not need to be a first-time home buyer for that one as well. So there's a lot of moves where we can make to help someone buy a house that might be struggling with the funds for closing, because that's a lot of the issues, right? We can qualify them, but where's the money coming from? So we have programs that we can maneuver in that can allow you to get into a home and give you some money without having to maybe ask for concessions. Also, National Faith, certain cities, you can get up to $14,500. City of Detroit, $25,000. But you have to be living in Detroit, buying in Detroit. But in each situation, this is life-changing money for our buyers.
I agree with that. A delicate conversation, so I'll go over to Lisa on this. Lisa, I just noticed this a little bit. If you have a house that's in pretty rough shape, you're the listing agent. If you haven't and it's been on the market for a year, and the house has issues. There's a tree on the garage. I'm just talking about this one that we ran across recently. Complete peeling paint and rotted wood and stuff like that. Deficiencies maybe in the crawl space, like minor things and some more major things. I think it's really, really important as a listing agent to be able to go meet the appraiser on that. And again, if you don't want to meet the appraiser at the house, or you don't want to learn a little bit more about what's really going on and what they're going to put on that report, then don't go. Lisa, just give me your view on the whole thing.
So powerful if you can be there. You can be there, and you're going to know things up front for sure. And every house will sell, right? It's just a matter of finding the right buyer that's willing to take on those things and being transparent about what we're dealing with, right? Because if you're not, it's coming out eventually. It's coming out.
Everybody knows.
Everybody's going to know about it, right? But you could waste everyone's time and drag your feet and not disclose, and then it'll come out later.
So what are someone's rights, that with a seller, that something comes out that wasn't properly disclosed?
So if a buyer.
Yeah, like a seller, like on the seller disclosure, maybe something, like you said, it's going to come out. It wasn't properly disclosed. What are the rights of the buyer in those situations? Because sometimes we get calls after the fact too and be like, hey, there was this water issue and they didn't put on the seller disclosure. And, is there any ramifications there?
So in the middle of the transaction, obviously, right, we can do a lot of things. We can negotiate. We can cancel the deal. We can work it out. But after it's closed, unfortunately, you lose all your power and I lose all my power. It's closed now. So now that becomes a legal issue that's outside of our control. And then they're going to have to take it, to higher powers.
Yes. But that's also a reiteration of why you do not waive a private home inspection.
No.
Because once you drive that house off the lot, it's yours.
Even simple things as a moisture test in the basement. That can be huge. I had viewed a house 3 different times with a new buyer, brand new couple, adorable couple, barely getting into a house. And the 3rd time we went there was our inspection. We all had our shoes off and the carpet was wet in the basement. First time we noticed it because it was brand new carpet. Thank goodness we noticed it at that point because we were able to make the adjustments. Buyer still got their great house, but it was no longer leaking.
Your nose knows. Was it a open house last week? And I walked in the house, and yes, I did smell the moisture and the mold and that kind of thing. But after being there for an hour, I said to the agent, I said, I don't smell anything anymore. So it's just like even after an hour. So if it's your house, you might not pick up on it.
Well, we know in Michigan we're going to have moisture in basements. It's
4 seasons, baby. Yeah.
We look at the weather's been crazy. Look, last 10 years. All right, it's changed, and you're going to have some dampness, some moisture. If you don't, you're lucky, and that's great. But that should not stop you, unless obviously there's foundation issues, there's cracked everything.
And
basement
sometimes
walls,
it's
but
easy fixes, right?
really
Reroute
easy
the
fixes.
gutters,
Yeah.
put in more grading. It's simple things like
Yeah.
that can
Grade
really
away
make
from
all the difference.
property,
Oh,
right,
huge.
grade away.
Yeah, downspouts up. That was always the key.
Downspouts. Keep the
So if
water
you look
away.
at your house right now and you're seeing those issues, or the dirt seems like it's coming away from the foundation, that's a downspout issue. And again, like you said, a couple downspout extensions really can solve that, and you can bring some backfill in and then see where you're at with everything. So lots of maintenance you can do. There's so much to learn about a house. It's always changing too, and a little tougher here in Michigan because of the weather situation. So you're experiencing, you go up in an attic in the summertime on a 90-degree day, you can't be up there too long, 120 degrees plus. So all that moisture's up there. Now, different things can fix that problem, like attic fans.
Yes, and for me, going to my inspections, I've learned so much. Truly, all of the inspections I've attended, I listen to every single thing that the inspector says, and some of it makes a lot of sense, and it's easy fixes, right? It's super easy fixes. Some of it's a little more detailed if there's a major problem, obviously, but for the most part, it's easy fixes that you can just take care of.
Yeah, we have a lot of inspectors that come on or call into the show, and like they often talk about that. Not everything is a deal breaker. There's certain things that are that are going to come up on the inspection, but you're able, like you talk about, negotiating it, right? But Harvey's been on the septic thing right now. Now that's a major expense, right? If you're buying a house with a septic well, those are things that are major expenses, and you need to make sure that you're doing the proper inspections on those particular items. But if it's maybe like like downspouts or something like that, or there's I got a FHA repair on the milk chute wasn't painted correctly or something silly, like put some paint on it, get it over with. You saw it on the inspection. We know what it is. Be transparent with the lender so we can adjust those things.
Nobody uses the milk chute.
Nobody uses the milk chute, but they hit me with
through a
it.
house in one of those if you can fit through there. Becky, it was about 24 years ago we started the radio show, and that's when we started realizing some of the callers were calling in about these sewer lines. So it started with the sewer lines here in Metro Detroit, because a lot of homes that were built, obviously 30s, 40s, even earlier than that, they're deteriorating. So now we've moved on. More and more people are doing the sewer line inspection. So at least you know what you're dealing with.
Just had one. Literally just had one, and my sellers are having it fixed. They luckily had insurance for that, and they're having it done from the inside of the pipe. Actually, some sort of a glaze
they do a
or
sleeve,
something. Because I've seen it done other ways where they're tearing up the entire yard, have to remove cement fences, and it is torn up for a long time. So this is pretty exciting that they can do it another way. And thank goodness my clients had insurance for that, because it did offset the cost pretty substantially.
Yeah, that's a high cost when you're dealing with that. But you have to, like in Oakland County, especially Royal Oak, I know there's you do not have a sewer scope.
Yeah.
You just have to have it, because especially with the wipes, people are flushing those down and the wrong things. I mean, and if you have to do it from the outside, yes,
right?
trees,
the
roots,
roots in them. Yeah.
I think I did yell at my daughter once. I think she threw a Q-tip down. I go, "What are you doing?" I'm reaching my hand in the toilet and all that. But don't put stuff down the sewer lines, right? Keep your value there. We don't have to repair stuff like that. All right, last couple minutes here of the show, 248-539-9797. If you give us a call, or if you give us a call at Capital Mortgage at 1-800-LOW-RATE, we'll set you up with all these great real estate agents. Lisa LaRowe, eXp Realty. She's awesome. All right, we do got a call here. Let's go to them all. We got Roger on real quick. All righty, here we go. And you are on, Roger. Good morning. Welcome to the show.
Hey, good morning. I have a quick question for you. If two people's names are on a deed, can they both get separate mortgages, or can only one mortgage be on a house?
One, just one on that one. You can't have separate liens. You could create a huge mess if that was a situation. All questions are great.
Only one, but it can be your name and their name on it jointly, or it could be just one of the parties. But you cannot have two. It can't be split half and half.
So one party could.
Or is he talking about like a home equity line of credit? Like I guess like what's the like where what are you going with that?
Yeah.
Like what's the goal?
Well, okay. Here's the thing. We just got a ladybird deed on my mom's house. My mom passed away. It's me and my brother, but I have some old bills and everything. If I get the mortgage on there, can he turn around and also get a mortgage from someone else through a different company? He has his mortgage, and you see what I'm saying?
No, yeah, you guys are equal owners to the property, right? So like you're talking about like, can he, like you could refinance and, put the mortgage in your name and do a cash out refinance, and then, could technically he do a home equity line of credit later on after the fact, but you guys both stay on title. That is something that you could possibly do, but you can't get two first primary mortgages, only one primary, and then you can do a secondary, like a home equity line of credit or something like that. That would be your only two options.
Right. Two brothers are on the deed. Hey, great call. Thanks, Raj. I'll elaborate a little bit on that.
Yeah, we'll call you after the show and kind of get into that. But you can have a first mortgage, a second mortgage, but you have to stay on title in those situations.
Right. Both parties still stay on title to it. Again, just getting closer here to wrapping up. I'm getting a call from Bobby over here. Bobby, want to thank you. Bobby, first time doing the show with us. We appreciate you, man, behind the board here.
Yeah, everybody watch out for the Fed announcement, but be cautious. Call the people that you know. Give us a call at the office, 1-800-LOW-RATE. We'll walk you through the Fed announcement. And hopefully it's 50 basis points. I'm thinking my prediction, everybody, it's going to be 25. We'll see what happens.
All righty, Lisa and Lindsay, you guys are so fantastic. Definitely looking forward to next time you're on. And of course, the great Becky Yaley. Call us at Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. And we'll see you next Saturday.
Thank you.